Guys, this is my third video today, and now look at the price 85,000, or the market is going below 85,000. Compare also the price and the time I made the last two videos today. The price is always visible, and now here, and exactly the same happening. The forecast is very valid. We have got right now very strong negative data, and therefore now Bitcoin and also the other assets, you can say nearly any kind of stocks and shares are dropping. Dollar is skyrocketing again. Bonds and yields are exploding. So what happened? We have received now the US consumer confidence data. Expected was 102.5, and the actual number is far below the forecast, 98. Also, the US Secretary Bessent repeats, and I quote, "I advocate for a 3% fiscal deficit to GDP ratio." Then he said, bank regulations have pushed borrowing to an unregulated financial system, but does not see a stability problem yet. That means that we will have the next crash initiated, or the drop down, the much more bearish momentum down initiated in the bank sector. He said also, "I aim to reduce spending, and government jobs do not generate real long-term wage growth." Also, the Trump trade advisor Navarro pushes to X Canada from the Five Eyes intelligence group, meaning now the tariffs. And there are now some videos, I think, at YouTube, people saying, yeah, this time is like the last time. The tariffs on Mexico and Canada are not, can delay like last time. But guys, not this time, I assure you. Okay, do not listen to every video or narratives. Again, it's not against those YouTubers or social media. I'm just fine with them. I watch them just as fun. But when you are trading, making money, never ever listen to them. Even you are watching my video, listening to my words, please make your own decisions wisely, okay? So technical analysis, fundamentals go align with each other. With other words, the technical analysis, if you look at any chart, you see that the prices be making constantly and very sharply, very fast, lower highs and lower lows on any time frame, go on higher time frame. Secondly, what I say here, I give you facts. I'm not saying just because I like or dislike any kinds of assets, for example, Bitcoin or Forex or whatever. I give you my opinion, but I deliver also the facts. The next one is the US or 5th District Survey of Manufacturing Activity. The Richmond is above forecasts, above expectations. But I tell you now, I break it down why I not only believe, I am sure we get much more deeper. So it looks like the news has a mix of economic, fiscal, geopolitical factors influencing market sentiment, and of course Bitcoin can be impacted by some of them of several reasons. A lot of people, for example, write me and tell me, yes, but Bitcoin has nothing to do with those economic numbers we see every day, or you read every day, or you listen to every day. But I will, in this video, I make it clear, I make it so understandable why it matters. And at the end of this video, I am 100% sure that you start to think about it. First of all, to the numbers, why US consumer confidence drop matters, because a sharp drop in consumer confidence can signal weaker economic sentiment, which is negative for risk assets. That includes Bitcoin. Bitcoin is a volatile risk asset. If consumers are less confident in the economy, for example, they may reduce spending, right? Because everything is becoming much more expensive. The loans are steady if you don't have high loans, but the living costs are exploding. So I'm sure people, especially those who have families, children, and a lot of other people to keep care on, of course, they will have it much more difficult to make some money free to buy assets, for example, to buy Bitcoins. So now, if consumers are less confident in the economy, the risk appetite is off, right? And also there are other people, because the living costs are inflationary, exploding, they sell their assets they have already, for example, stocks or even Bitcoin, meaning the liquidity is getting out of the market. Okay? A decrease in consumer confidence suggests a potential slowdown, leading to a less favorable outlook for investments in volatile assets, for example, like Bitcoin, Ethereum, and so on. Then the next data came out today was the so-called Richmond Manufacturing Index surprise. This index came in stronger than expected, which could be seen as a sign that some sectors of the economy are doing better than anticipated. However, it might also lead to concerns, for example, about inflationary pressure if the economy remains strong, which could lead to tighter monetary policies. Meaning now 58% of traders believe still that now a possible rate cut of the Federal Reserve of the Fed will be maybe, not definitely, maybe possible at the end of this year, not in June, but maybe in December of 2025. That boosting the US dollar much more higher, and that's bad for stocks and crypto. Now, if inflation expectations rise, the Federal Reserve may need to keep interest rates higher for longer, which can dampen investors' appetite. Again, that means your risk appetite gets dampened for speculative activities like, for example, buying Bitcoin. Why speculative? Because you never definitely can tell if the Bitcoin goes higher or down, right? Also in these videos, what you see is just a suggestion, opinion, not a clear 100% target, but it is something, let's say, with a probability, right? Not 100% sure. Then we had the U.S. Treasury Secretary's remarks that excessive spending and economic fragility, comments about excessive government spending and the fragility of the economy can raise concerns about long-term inflation and health of the economy, meaning that if investors start fearing that the U.S. is on an unsustainable fiscal path, they may become more risk averse and seek for safer assets, for example, yields or bonds. That's the reason that now again, the 10 years yields, which has been down for the whole day today, are now plus 0.75 again. So, and that leads, of course, to negative pressure on risky assets like Bitcoin. So meaning dollar up, bonds or yields up, and all other assets against dollar are down. So Bitcoin. Then we have interest rate and monetary policy outlook. That causes that the statement about reducing spending while easing money policy indicates that the Treasury is looking for a balanced approach. However, I have to add that easing monetary policy, for example, while controlling spending can be a difficult combination to pull off without triggering inflation concerns, which might weigh negatively on markets and cryptocurrencies. And now we have, additionally to all of this, we have now bank regulations and financial system risks, meaning that now that this comments about banking regulations pushing borrowing into unregulated areas could imply risks in the broader financial system. And this uncertainty may push investors away from more speculative investments like Bitcoin. Last but not least, we have geopolitical tensions with China, Mexico, Europe, and Eurozone, I meant, Canada, so China and trade. The mention of examining China's non-tariff barriers and currency policies introduces geopolitical uncertainty, particularly surrounding trade relationships. We know that Bitcoin often reacts negatively to global instability because it can prompt a flight to safety, where investors pull out of riskier assets. And this includes, of course, cryptocurrencies, including Bitcoin, in favor of more traditional, safer investments that include, for example, yields or bonds. So Bitcoin's role as a speculative asset, despite that Bitcoin being seen as a hedge against inflation, it is still highly correlated with risk sentiment, meaning this is definitely not valid. In sometimes, yes, but in 80 to 85% of time, I have seen, and this is again my personal opinion and experiences, that it's not a hedge or a hedge instrument. When economic data points suggest a weaker economy or financial instability, even assets like Bitcoin that are often considered alternative stores of value can suffer. So as investors may liquidate positions to preserve capital. And therefore, be very careful. A 90-year-old millionaire trader told me once, I was talking with him, and I asked him about his long-term, very long-term experience as trader. He started, I think, with 20 or 21, and he's still plus 90 years old. And he told me, as he started, his boss told him, a lot of people will tell you a lot of opinions. A lot of people will tell you that contrarian opinion than yours is more valuable than your own opinion, what you have. The only thing what you have to do is you ignore all of them and you do what your decision-making head is telling you. And that's exactly maybe the only advice in this video and all of my videos I can give you. Sure, make your own decision. You can watch or not watch any kinds of videos, but at the end, make only your own decisions, right? Even if your decision is contrarian than mine or others, because a lot of people try to buy something Not that you want, but they want you to buy them. And that includes also Bitcoin, that includes also stocks. For example, you see the CNBC, this is this guy who always says stocks will go up, crypto goes up, and then 2 hours later everything goes down, crashes down. So, and there are of course a lot of influencers. Again, I know they make the videos for clickbaits to buy their products, whatever. Watch them too, watch all these videos too. But when it comes to trading and making money, make only and only and only your own decision, okay? So in summary, these news items collective signal a more cautious economic environment, and Bitcoin's decline could be attributed to increased risk aversion, concerns about inflation, higher interest rates, geopolitical tensions. Therefore, Bitcoin, while seen as an alternative to traditional assets, is still largely driven by speculative trading, which can be, of course, highly influenced by broader economic and political conditions, okay? So have a good time, guys. I hope you had still a good trading day. Continue with that, keep it up, and see you next time.